Today's topic is cash disbursements, and cash disbursements, as I said before, is really just cutting a check. This is a part of the expenditure cycle, and within the expenditure cycle, we have purchases, which included accounts payable, and you will recall this is where we created our voucher or voucher packet within the Warren Sports Supply. They do not have a voucher system. However, it's common to use that. So proceeding from that, then we go on to our cash disbursements. This is a separate system, and if you're looking at your SUA packet, in particular, you're looking at the flow charting, you'll notice that they're on separate pages, and it's a very important point that the creating the liability and paying it are separate. Now, a few of the items we have within the SUA that we'll be working on today will be those in which we don't really create a liability, but we pay it immediately, so we don't go to the bother to create the liability. However, you still need to think of it as two separate systems. You need to think of it as a system that says it's a go-ahead to go out and make this purchase or incur this expenditure at a future date, and then we actually pay it. We look at things again, so it adds, as I said previously in the introduction to this PowerPoint, within Canvas, I said that it's really adding a layer, and cash is so fluid, it's a good thing to add this layer. We'll be talking about the payroll system after we finish this module, and within it we are going to actually doing the disbursements and the creating the liabilities all together in one action, and we only in this system create a liability when we do our accruals at the end of a time period or a period of time in which we're going to do our financial statements. So typically within a payroll system you don't have the same thing happening. You don't have a separate purchase action and a separate disbursement action. You typically have those all combined. And we have already talked a bit about the fixed asset system, so we really are going to have just the payroll system to start talking about, and then we'll be through with this expenditure and once we finish this discussion on cash disbursements. So I refer back to your flow chart in your flow charting, which is on page 22 and 23. Page 23 is the cash disbursements part of it. We have internal controls in this cycle. And when we're talking about segregation of duties, we're talking about separate segregation of duties on page 22 flow charting and 23. So there's no overlapping there. It's separate people, separate roles in the creation of a liability and in the disbursement. Then we're going to go through the process, and we're going to talk about how these are actually recorded in the ledgers. Cash disbursements is another way of saying writing and mailing a check. Now today a lot of times we don't do this. We do wire transfers or we do direct deposits, but we still use this cash disbursements terminology. Recording is done in the cash disbursements journal. When we receive cash in, it's in the cash receipts journal. So there's a corollary there. The credit is always to cash. If you have separate operating bank accounts, then you're going to have separate cash disbursements journal. When we get into payroll, we'll talk about the reason for this, but there will be a separate operating cash and payroll cash account. The flow charting of this cash disbursements, if you want to review your SUA packet and follow along, you could. We have a process where we are matching up the purchase order, which is really the approval to make the purchase, the receipt of goods or acknowledgement of services, which comes about from either a receiving report or someone saying, yes, the service was provided. And then we have a billing, and this is what I've referred to as our three-way match. After we have done the three-way match, we are at a position where we could make a cash disbursements. But before actually cutting the check, The accounts payable clerk is going to review everything. Is this a valid address? Do we know address? Are we going to match up all the addresses and make sure we know where the check is to be sent or if something has changed? Excuse me. Do the amounts extend properly? And then, I said she or he, the accounts payable clerk, should hold back on making a payment until it's really due. So we'll hold back on it, and then we have a group of payments that could be processed today or could be processed at later dates. And if we can process it later, process it later. Do we have all the approvals? This is just like a final check of everything. Is everything in order? And then what accounts are we going to be using? We need account numbers, and this is a ledger account numbers, because when we actually process this check, we're going to have to put it in disbursements journal, and for that we are going to need a debit account number. We have the credit account number. That will be to the cash, the operating and cash account, which corresponds in our chart of accounts. 6 is very important. Do we have cash available? Along with this process, we have a process where someone in management is reviewing the cash available. They're saying, well, we have this cash coming in, we have this cash going out. It used to be that we would have to look at this and we'd talk about something called float. Today, float has been eliminated, and float is really the time between writing a check and it actually clearing the banking system. We also have another kind of float, which is when you make a deposit, when does it actually hit your account? And so we have to look at what time of day in particular that the cash receipts came in and were deposited at the bank. So we're looking at cash flow, and we're handling cash flow and recognizing which checks need to be sent out today, which can be postponed. And really it has to do with the time value of money and those concepts are the reasons why we want to speed up the cash coming in and slow down the cash going out. And now all of this needs to be summarized somehow, all the data that has to go along with the voucher. It needs to be summarized into one form. If you're using a voucher, it's all on the voucher. But if you aren't using voucher forms, you would probably get a piece of paper or some form that you would devise so that you could summarize it all, because a person is going to have everything readily in front of them to determine where the check is going, the amount of the check, what the account numbers are. It needs to be summarized. Segregation of duties. Now, as we looked at our packet, we understood that the accounts payable clerk was doing the roles, some of the roles that were on page 22. On page 23 are separate people. The accounts payable clerk can handle the check forms, and there's a long list of forms. There's forms that are separated perhaps by perforations, much as your forms are within your SUA packet, and these forms are fed into a printer. The accounts payable clerk can handle the forms, but once the forms are signed, they actually become an asset. And if they are an asset, then the person who is involved in record keeping, which would be the AP clerk, cannot also have custody of the asset, because that's a violation of segregation of duties. After the verification process is completed, and this is in the cash disbursement side, another verification process, it's only at that point can we actually go on to cut the check. At this phase, you could have more than one authorization involved. So checks over a certain amount may go on to a second person for review. Checks for certain items may go on to a second person for review. There is at least one review done as the check is processed at this point. Now, I should mention at this point that there is a stamp, which is the signature which goes on the check form. Instead of an individual handwriting their signature on the check, there is a check stamp. You will keep the check forms in a closet or in a locked location separate from the stamp, because once you combine the two together, you basically have created cash. So it's has to be very tight. Security has to be tight over these two things, and there is one or more individuals who have the access to that stamp. You would not want it to be available. You would want it to be only there so that the person who is authorized to sign the check has access to it, and separate it from the forms. One of the textbooks I used to use was a Hall textbook, and they discussed an automated process whereby you could do the disbursement procedure. So some of you who are systems minded might say, well, we have all these documents. These documents are all linked together, and we also know the due date because we can find that from the documents. So why can't we just go in and write the check or process the wire transfer when all of these are matched up? Why can't we just go ahead and do that? And the answer is you can do it, and this is called an automated three-way match, and so it can be automated. However, as I note at the bottom, when you automate this system, it really stresses the internal controls of it, because previously we had an individual who was reviewing things, at least one individual in the accounts payable side, the liability side, and then we had people also reviewing, one or two people reviewing on the disbursement side. And so what this is doing is it's reducing the levels of oversight. So you have to have more oversight prior to check processing because the management involvement in this is reduced. And this sort of process often is done as management by exception. That is to say, if a check is over a certain amount, in this case it's over 100, then you would have an additional layer of review. In your SUA packet, in the reference materials, you'll be in the reference book, you'll be in chapter 4 of it. And for each one of our PowerPoints, while we're working through the SUA packet, you should have reference chapters to read or to review, which discuss the documents, the role of the documents, the actions. And in this, you would see we process the disbursement and we record it in the cash disbursements journal. If an account payable is involved, in other words, you're paying off what was created as a liability and accounts payable, you would then post the subsidiary transactions to the subsidiary account payable accounts. I believe that in one of the activities in the SUA packet today, you will be doing this. In the other two, they have not yet created a liability, and they skip the creation of the liability altogether because when they receive the bill in, they automatically go to paying. If you do this, there's no posting to subsidiary accounts payable because you have never created that subsidiary accounts payable. And we are not going to, as in the past, we are not going to post to any of the other accounts, only to subsidiary accounts payable if needed. The documents, okay, here are some questions for us. Which document typically triggers the three-way match? In other words, which is the last document to get in when you're creating your packet or your voucher packet. The last thing you get in is the invoice. Document flow. Which of the following document departments does not receive a copy of the purchase order? Well, receiving is going to have a form of the purchase order because they need to know, they need to be able to communicate back and say that this purchase order has been filled, and they need to be able to link the documents together. Accounts payable, I have been referring to as accounts payable clerk, also obviously needs a copy of the purchase order because they're doing the matching. And that's something, one of the documents required in the matching. And purchasing is the one that actually initiates the process. So they might actually have the original. And it says a copy, but they might actually have the original. So that leaves us with the general ledger. Which control helps to ensure that inventory items received are the correct type, the correct amount, are in good condition? This is called a blind copy or a blank copy of the purchase order. So receiving, you would like for receiving to be picking up the items, counting the items, not just taking an estimate and assuming that the quantity that's written down on the purchase order is correct. You want them to actually physically pick up the items and count the items, because in so doing, they are able to say whether the items are all alike, they're all the same item as they should be, that all the items are in good condition, and that the total quantities agree. And if you don't have this process done, they will shortcut it. They will just say, yeah, this is what we got in, I'm going to check it off. So this is a way to ensure that our inventory records are kept more correct. Which of the following expenditure cycle tasks should not be separated? And this is where I'm going to tell you that all of these items should be separated, and I'm going to discuss those. Purchasing inventory items, that is an authorization. Updating the inventory subsidiary ledger, that's record keeping. Receiving inventory items is handling, which is also custody. Updating inventory subsidiary ledgers is record keeping. Storing inventory items is also something like handling, which you would call custody. And updating inventory subsidiary ledger, record keeping. So you can see A, B, and C violate separation of duties. In D, updating accounts payable records and posting to the cash disbursements journal. Typically, we separate these functions. Yes, they're both record keeping, but typically you should separate those functions. The duties of an accounts payable clerk, also known as a cash disbursements clerk. If you're looking in the flow charting when we're talking about this, it would be the Ray Kramer function. That would be on page 23. And it says, which of the following tasks should the cash disbursements clerk not perform? Well, the one that they should not perform here is going to be the one in which they are approving the liability, because the things that Ray Kramer would be doing, and you will be doing within your SUA packet, is looking over the documents, checking again completeness and accuracy. This is that second layer of controls, because we already checked things when we were creating the liability. We're checking them again when we're making the disbursement. The check will be prepared in this phase, And then after the check is prepared, you are going to mark the voucher, or you are going to mark the documents in the instance of this SUA packet that you aren't using a voucher. So you're going to go in and you're going to mark on the invoice, you're going to say check number, you're going to say the date of the check, and you're going to put Ray Kramer's initials on it to say we have canceled out this packet, or we have marked it, we have said this bit has been paid. And again, in the SUA, you do all of this work within the invoice. For the 3 cash disbursements you're going to do, each one of those, you need to write on that invoice that it was paid, the date, the check number, and Ray Kramer. Okay, so now I believe you're ready to complete this module.